All right, should be live. All right, so looking at today, start with what happened yesterday. Yesterday closed this gap here, these lows and this high. There's that open space that the market wants to fill, and what yesterday did, it gapped up itself and then closed that gap, and then buyers continued, and we were able to close strongly above the moving average. So that's a bullish sign there. What that created was another gap here, and you know, we had this big selling here, and now we've had a lot of buying. So we can expect there's going to be a trading range over the next few weeks, next couple months, right? We have these lows here, and then we have these highs, and really this is all one big trading range here. So I would expect this gap to fill at some point. I think key prices today, it's a 50% pullback of yesterday's range. So we have yesterday's range, 50% pullback, comes back to where this gap closed at, and also it's sort of this midpoint, this breakout point here, with this high, and the market broke out, and that's where it went up from. So this is kind of there's been support and resistance at this level before, and so I think if the market starts to pull back today, I think this 50% pullback will be a good price for it to do that. It'll be a target for it to come back to. So let me draw it in on the 5-minute chart. So there's that. So if the market starts going down, it'll look at this 50% pullback as a target. What yesterday did, it closed above the moving average. It also closed above the 50% measured move of this range here. So this high to this low. And instead of there being sellers at the moving average and at that 50% pullback, they kept buying, and they just bought right through it. So I think it's reasonable that they'd want to come back and test this level in here, test this gap, test the 50% pullback yesterday, 50% pullback of this whole range. So we'll keep an eye on that as the day goes on. So what's happened so far? We've spent time around yesterday's close, and we've had several overlapping bars here. So bears tried to sell, bulls bought it, tried to sell again, bulls bought it, but then bulls had this bad tail on top. So a bit of a trading range open. However, this is the type where it wants to break out of this range. So what traders will do with this kind of setup, with this kind of open, they'll buy above bull bars, lower here, hoping that it's the low of the day. All right, so an example from yesterday, we have this range here, but you are getting good bull bar, like you are getting good signal bars, good bar here, good bearish signal bar here, good bull bar here and here. So when you see that, that's a breakout mode pattern. And what traders do on the open when it's like that, they buy above the good bull bars and sell below the good bear bars, hoping that it's either the high or low of the day. So let's say they sold here, hoping that it was a failed break above yesterday's range, and then that we would sell off back down to this close. They're hoping this would be the high of the day, so they sold here. You also had people buying here, right? Double bottom at the moving average, slightly higher than the open, so it was testing the open twice. So good buy above there, and then they're buying. Well, that's a good trade for either a scalp or a swing up, but they're buying there for basically betting this is the low of the day. So they buy here and they, really just kind of try to hold it the rest of the day until they get clearly a reason to sell. So these are all first entries here, except for this would be a second entry short. Although we had this measured move here, so they got 3 strong bull bars, and that measured move puts it up here. So maybe some bulls will get out below that, others will hold on, betting that we'll get up to that measured move target. And then maybe once you get this breakout of that channel there, and maybe you can start to classify it as being a bit overextended. So then once you get the double top here, like this high and then this high, that second entry short, maybe get out below that once it's a little bit later in the day. So traders were selling below good bear bars and buying above good bull bars, betting that they would be the low or the high of the day. And I think we'll have an open similar to that here, where it might test around a couple times before heading in one direction. Like I was saying, we have had a lot of strong buying lately, but I think the market will want to test down to this 50% pullback before it heads too much higher. $40 seconds left on this bar here. We're getting a bit of a wedge pattern. So first push down here, pull back, second push, pull back, and then this little bar here could be counted as the third pullback. So it's kind of a micro wedge there. Now for this to be the wedge here, I mean this needs to be a bull bar here to be able to buy above. So if it's just a bear bar, then well, we need there to be a bull bar to be able to buy above. So I'll take that. Once we get a bull bar somewhere in here, we can classify this as a wedge. So still getting these overlapping bars, but you can tell for the most part the bars are closing near their high or their low. So as far as being a signal bar, they're decent signal bars with them having a good body. So like, you call this as a double top. I had a top here, top here. You know, effectively that'd be a double top, and then we have a short there. So there could be bears selling there, hoping for that 50% pullback. So draw it in there. So that's the 50% pullback of yesterday. It also coincides with this low here, this big tail. It kind of catches everyone's eye, and there might be a lot of orders down around there the market wants to get down to. So if we can get below the moving average and then get a failed long, then it might be good to go short below that. So let's say we get either a bull bar here or on the next bar, and then we would have a wedge pattern there. The push down, second push, and this would be the third push. And you could call it a wedge bottom on opening reversal, right? And then people would buy above that, betting that today's going to continue up. But like I said, we also have this measured move target, or the 50% pullback down here, that the market will probably want to come back and test before making any real big moves back up. I'll be right back. So bulls might be able to make this wedge if they can get a bull bar here. Something I'd be looking for is for the bulls to get a wedge here and then actually fail to go up, and then with them failing to go higher, I might be able to get a good short to try to get down here. Something to note, every bar has been lower than the prior bar. So each of these highs, they're all lower than the previous height. When you start to get multiple bars like that, like 6, 7 in a row, usually in the first time it goes above a bar, it's sold. So when you get something like this, all these lows are higher than the previous low, and the first time it goes below a bar, it gets bought. Or here, you have all of these highs that are below previous highs, and the first time it goes above a high, it gets sold. So market's trying to create this wedge here. If we push this down, see if they can get a good close on this bull bar. So it'd be a wedge opening reversal. You could also call it a double bottom with this low and this low. So if we can get a good close, should be people that will buy above that for swing up. So they're buying above it, betting on it. This would be the low of the day, and then maybe the market's going to try to test up to 5,500. Maybe first they'll try to do a measure move up of this range. So people that are buying above this, they know they're going to lose a decent amount of the time, but when this is the low of the day, then they'll get a possibly measure move up or even much more than that. So anyone that's sold above this bar, they've at least made, so it looks like they were able to make a 2-point scalp if they sold above that bar. So now when I'm when I'm scalping, um, if I see something like this, I don't I if there's a bull bar, I'll avoid selling above the bull bar. But if it was a doji or a bear bar, then I would try to sell above that for a scalp. But I'm not gonna sell above for a scalp if there's a bull bar. I don't want to be buying. I don't want to be selling at a like a possible wedge opening reversal up. So like I think this is fine to buy below here. But this is kind of the same case here. We have multiple bars up above the prior low, but then you get a bear bar, so I would avoid buying below that. And same here, multiple bars down, but then you get a bull bar, so I'd avoid selling above that. You can see both of these cases did work, but I would be hesitant if you're getting a good signal bar, so I wouldn't want to sell above that good signal bar there. So any of the bulls that bought, they're stopped out here. And you can see how yesterday ended. In the last few hours, it was in this trading range here, and these last few bars up here were all overlapping and sideways. And we're really within this range here. So the market opened above yesterday's high, and then it's pulled back into this trading range. So the market is seeing this area as a good price. Hey, good morning, Jay-Z. Have you been having a good week? So the market is still wanting to break out. Now it has overlapping bars, right? It has these big tails and the bars are overlapping, but this market is wanting to go in one direction. Like I was saying, when you see so overlapping bars and tails are a sign of a trading range, but when it's on the open like this and the bars are good signal bars, it's like the first bar closed near its low, second bar closed near its high, this bear bar closed near its low, this bull bar closed near its high. You're getting these good signal bars. People are selling and buying above them, hoping for a swing. So the market is looking to break out in one direction. So I think at this point I'd be looking for shorts. It's like we were talking about. The market can get below the moving average with bulls failing to go higher. So this would be failure here. And now we're below the moving average. I think I would count this here as the double top. So this attempt up and then this attempt up. Alright, now it's not the prices are not the same. It doesn't look like a traditional double top, but effectively what's happening is it's acting as a double top. You're doing so. Well, we'll have a good day today. We're gonna have a good time. So what the bears want here is to close below this low. If they don't close below this low, that'd be a sign of weakness. But if they can close below this, then the bears are still in play. They still kind of have ownership over the market. Could this still be a wedge? Yes, it could be. I might move it down here. So first push, second push, then third push, and we get a bull bar somewhere here. I think I would rather look at it as a failed wedge and then a break below, and the market's trying to go lower. So I'd rather be looking to be short. But that depends a lot on how this bar closes. If the bears are unable to close it below this low, then it'll be a sign of weakness. Because look at all these tails below here. So bears sold during those 5 minutes, but they were unable to sell the whole time. All right, so we closed above the low there. So bears can move the market down, but then they can't hold it into the close, so they can't sustain that selling. The bulls overpower them in the last minute or two. Today's unlikely to be a big bear day. So I was talking about at the start. We have a couple prices here, a couple important pieces around this price. So 50% pullback of yesterday. This is yesterday's bar. That puts us here. And here it is on the 5-minute chart. That's what this line is. That's a 50% pullback of yesterday's range. There's that. There's also the top of this gap. So these two lows here and this high, there's that gap there that closed yesterday. So these lows are also at that 50% pullback. So I think the market might go down to that, but I wouldn't expect it to go much lower. So the bull's trying to form a wedge here. Bears failed to close below that low, and now bulls are getting a good signal bar. We'll have to be able to close it strongly. You know, they can't have a tail on top. Now, I would not buy above that wedge. We're at the moving average. I think we still have targets below. I just generally don't want to be buying into the moving average like that. I'd like to see the wedge, then I like to see the bar get above the moving average, then I can look for longs above the moving average. So it's a good bar. Like I said, I'm not buying there, but I think a lot of people would buy, and then they would buy more lower. They'd buy here, they'd buy somewhere down here above another bull bar. So, you know, there's some chance that this is the low of the day here. So there's some chance they'll catch a big swing up. Then most of the time they'll be able to buy more lower and get out with a small profit or get out break even. So if someone's doing that, they just have to trade small enough so that they can handle that risk and be able to buy more lower down here. On the 2000 tick chart, we've had this trend down here. Something like that. So, I mean, we're at an important juncture. Are the bulls able to make this a low of the day and buy it up, or are we really at the top of this channel and the bulls are going to fail here and then continue lower? If I had to, I mean, what I think is going to happen, I think the bulls might go up a little bit here, and they're going to, I think they're gonna fail. I think the market will head lower. You know, even if they, I don't think it's gonna go just straight up here. I think if the bulls can get some movement up, I still think there's gonna be a bit of, you know, some pullbacks to the moving average. So if the bulls can get a good follow through bar like this, that might change the market some, because that would be the first time today that we've gotten two bull bars in a row. So far, every bull bar has been sold off. Now, so if we can get two bull bars, both of them closing around their highs, then there'd be a bit of a change in the market. You know, this is the first time today that bulls have been able to make money buying above bars. So they bought here. They didn't make any money unless they bought more lower. But then here, buying above this bar, they actually, you know, were immediately able to get 4 points or so. So anytime you see buyers above bars or sellers below bars making money, then that's a good sign for them. All right, so Bulls got a decent close there. So, like I said, even if this is going higher here, I think we're going to have some pullbacks to the moving average. When you get a wedge, these three pushes down, you're expecting there to be 10 bars and two legs before the market starts to attempt to go down again. So they were selling through here, then you get a wedge. Now the wedge is playing out here. So we would expect around 10 bars and about two legs up. Once it's gotten 10 bars and two legs, then the market will usually try to attempt back down. So that's when the buying will pause and the bears will see if they can continue lower. I mean, really, for me, I'm just waiting for one side to be sufficiently trapped, and then I'd be interested in getting in that direction. So I'm interested in getting short, but I need to see the bulls that are buying here to be trapped. It's like we get back below the moving average, they try to go up again and then fail, then I'd want to sell below a bear bar. Or if the market starts going up, I want to see the bears try to go lower a couple times and then fail to go lower. So like bears that sold this close, they're selling more higher and they're trying to get out back at this price. If they're unable to, then they're trapped, and then the bulls will have a better chance at moving the market up. I wanted to show this example. This is kind of what I was talking about. So we had this huge bear bar here. Usually when you get a surprise like that, there's more selling. So either immediately or there's delayed selling, which happened here. So let's say someone sold this close. They're selling more, a few points higher. How do they know when they're wrong and when to get out? So they sold this close, and look at what these tails did. So the market went up, then it tried to come back here. So they sold the close, they sold more higher. So the close, I don't know, sold, let's say 5 points higher. So something like that. So they sold here, sold 5 points higher. They were able to get out break even here, but they were not able to get out at their first entry. And then you can see on the next bar, the tail was even higher. And then here, the tail was even higher. So when you see that, the bears are not able to get out with a profit or even break even. And then they're going to be scared, and then they'll be buying back their shorts above this bar or above this bar. And it's always really cool to look at a chart, and you can see what happens. So like why is this bar bigger than these? Well, because the bears are now trapped, and now they're buying back their shorts above this bar and above this bar. That's what creates these give up bars. Bears are giving up here. So if they had sold here, and if they were able to trade small enough and wait to sell below a bear bar, they could have sold here and then gotten out either break even or even with a profit, because they get back to the first entry. So also when you see a big bear bar like this, right? Well, I mean, just look at the chart. What's the first thing you notice? It's this. So when you see something like that, you're unlikely to have a big bull day. So you know that you're selling, the sells you take will have a higher probability. So big tail on bottom. Not the follow through the bulls wanted after their 2 bars here. So still indecision in the market. I think the bulls have a little bit more control here. Just like we were talking about, people that sold here, they've been able, the price has not come back to their entry point here, and this tail was even higher. So the bulls are stronger, but this was not the follow through they wanted after these 2 bull bars. So bears are trying to make a bar here. Can they close on their low? Or is there going to end up being another big tail on the bottom? So bears are trying to make a bigger bar here. So this could be that bull trap we were looking for. So bulls at a first entry here, at a second entry here, and they had a good follow through bar, but then they're failing to get good follow through. So failed second entry long, and then we might be able to start looking for shorts here. So when I see a breakout like this happening, I look for what targets are below, and we've already identified targets below. Now we have a new one off of this leg up here. So it's leg up, breaking down below that, and then measure move puts us down here. So with the bulls failing to go higher here, and this becoming decently large bar, what I'm going to do, I'm going to demonstrate how I would scalp this, and I'll do that with a couple of minis.
Order submitted.
So try to get 5 points here. Limit order might not be filled there.
Order filled.
All right, so I just go for 5 points. So I think it's important that when you're taking trades like this, well, before you take the trade, you need to assess what's the reason for this bar being like this. So sometimes you'll get bars that are large, and maybe there was some news event. For whatever reason, there's a large bar. Now, what I like to see if I'm going to be selling something like this is I like to see that that one side was trapped. So bulls try to buy here, try to buy again, and now they're failing. So the bulls are having to react to this big bear bar here. This is kind of changing the day. So I like to see trapped traders. I don't want just the bar to be large and then that be it. I like to see that traders are trapped and they have to react to it. So a couple of places where people might start to sell again. 50% pullback of this move. We'll probably have a trading range of this whole area here. So when you have a big bar like this, there's usually selling that happens pretty quickly after, or there's delayed selling like we were showing over here. Big bar, and the selling did come, but it only came after we had gone up for a while. And then people that were able to sell below this bar here were able to make money. So you're either selling here and selling like the scalp price higher. So if you're scalping for 5 points, then you would sell more for 5 points. And then if you're getting signals that the market is failing to go lower, like here, then just go ahead and take the loss. So you're either getting out here, or you're holding through here and selling more here. So after bad follow through like that, I'll just go ahead and try to get out break even on it. So what I'll be doing is I'll sell below a bear bar. So either it'll come down and get me out with a small profit here, or I'll sell below a bear bar. This is why if you're planning to scale in, you always need to trade small. So I mean, I really don't. Like if the market goes above this bar, I'm still fine being short. So I'm just gonna put that higher. If the market is going to continue up from here and trend up, we'll have chances to be able to get long and recover back whatever loss we would take from this. Just looking at the chart we have here, this is the largest bar on the chart that we see. So that's significant. That means that bears have some degree of control over this market. So either it's going to go down here, or it'll should be able to go up slowly enough so we can be able to get in for a long and win back any of our losses. Probably be some sellers above that. Sellers scalping, selling above that bar for a scalp. So this is the daily chart, and both bulls and bears are wanting to have this day be in favor for them. So we got a good bull bar. Bulls want another bull bar, or at least to have a small body or an absence of a bear bar. And bears want to create a bear body to give this bad follow through. So it's just something to think about. Like um, both sides have their goals that they'll try to close the day at. So we'll be looking for a bear bar to short again below. Crude. This is the crude chart. Crude's been very strong last week or two. It went from 71.5 up to 80. So bull's been strong enough here. They probably have a little bit more up at least. I'm looking to see if there's any examples that are similar to today. I don't recall any others apart from one that happened last week or on Monday. The Nasdaq has a better wedge pattern, something like that. Good bull bar, and then they've had a lot of buying after that. So the reason I'm holding on to this, at some point here, the bears are going to have some attempts down, and then either those attempts will work, and we'll be able to get out of this trade, or they're going to fail, and then we can get long off of those. The bulls have had a lot of buy-in through here, and they might be able to break out up here and continue up. We are getting into the sell zone now, so the open of the day. We're high up in this range. So 6 good bull bars. Probably buyers below the first bull bar here, or buyers below the most recent bull bar. I'm flipping over to
Order
the Emini.
submitted.
So I think if bears get below here, first attempt down should be bought here. We've had lots of gaps, consecutive bars up. Bulls have had a lot of strength here. So if it goes below this bull bar, should be some buyers below that bar. So I do think bears that sold this close, I think they'll have a chance to get out today. We might just need to hold it for a while. Like I said, if we really do start to break out above this high, then we'll have opportunities to get long that will offset that loss. For this reason, I, I don't recommend beginners to be taking trades with a plan of scaling in, because scaling in can be, well, scaling in, like, that type of trading is very difficult.
Order filled.
And um, it requires too much management. There's too many mistakes you can make. If you're on the wrong side of the trade, then that's how people lose the most money, is when they're on the wrong side and they keep selling and selling and it just keeps going up against them. We almost got to the open of the day here. So after 6 bars like this, we'll probably try to make one more test up to get up to that open.
Order submitted.
So got a bear bar, so I will add on to shorts below that if the market goes down. But I also think the market has a little bit more up after these 6 bars, so I have trying to get a 5-point scalp here on the fully mini. So basically, if we can get out with that scalp on the mini, then that'll offset all the losses from the micros. I'll go ahead and move my stop up here. So you can see this highest close. The bulls are testing that highest close there. So it's the same idea. When you're at the end of a trend, you have the final close. They buy that close and they'll buy more lower and they'll try to get out.
Target filled.
All right, so we were filled in our scalp there. So that was 5 points on the Emini. So that, so that's 250. So we could just close this trade and we'd be, we'd be up $20 or so. I do think that bears that sold this will have an opportunity to get out. So I will continue to hold on to that. But you can see how complicated this all gets and how much stress it can cause. So I just want to demonstrate, right? Like, how some people do trade, but it's not something I'd recommend for beginners or intermediate. You really have to have lots of experience, lots of time in front of the chart. Really have to understand. You need that experience because you have to understand what the market's doing, and then you have to have the discipline to make the right decision when You have to know what the right decision is, then you have to have the discipline to make it. I'm gonna check back on the Nasdaq. Yeah, I thought the Nasdaq was looking even stronger than the E-mini. It had a better looking wedge, and then I mean it had 6 bars up like the E-mini, but this looked even stronger to me than the E-mini did on like buying this close or buying below that. I think it's because this this bear bar is a lot weaker than the one we have on the E-mini. This is just much more of a, it's just kind of stepping down, and it's a big bar, but it's not too big, and you can kind of see where it's where the trap happened. Right, they were trying to go down, and then it just got bought. Versus the E-mini, this bar was much more of a surprise. We were kind of in a downward sloped trading range in a way, and then we had this big surprise bar. That's the biggest on the chart. So to me, that's a better reason. To me, that's why the Nasdaq looks stronger than on the E-mini. So where could this market be headed now? What are our targets above? First thing I always do is draw on a measured move target. So from this low to the open of the day. All right, so effectively doubling our current range. That puts us up here. And then I think the second logical one is just 5,500. Just a big round number. Let me look to the left as well. See if there's anything significant here. So we have this high here. I'll draw that in. Got a little double top there. So if it's going to go up, we'd be looking at a measured move from the low to the open of the day, put us here. We have this previous high that's up here. And then we also have 5,500. So if the market's going to continue up, then those are targets we would look at. if you're going to have the 2000 tick chart up, or really, I mean, really any chart, good activity is to always try to draw in trend lines. You know, you want the lines that have the most touches, and I draw my trend lines off of the bodies. So body here and there. Then, you know, you can watch it here. Is this going to bounce off of this trend line and keep on going up? Or will it get below it and then fail to go higher? So possible double top forming here. I will try to sell below a bear bar. I will move that up to sell below the bear bar if it forms. So not looking like this is going to be good enough bear bar to sell below. So I won't move my sell stop up yet. You know, so bulls are testing the open of the day. This really isn't the follow through they wanted after this bull bar. So if I squeeze the chart like this, you know, we were working down, failed to go lower, and now we're getting this bull bar near the top here. So they're really wanting this bull bar to be the breakout. And we can see the follow through here was this little bear bar, so it's really not quite what they wanted. I'm not saying this isn't gonna continue up here, but and you can see this trend line we drew in. You can see how it reacted to it there. So instead of it going down, breaking out below it, it held at that trend line. Let's say this bar closes something like this. I think we probably will be going back below this low, but if this bar gets a good close, I think it'd be okay for a swing up. So you buy above it, stop below, so you'd be risking 3 points. And then, you know, you risk 3 points to try to make 20. You know, I think that'd be good swing there, but I mean, it has to be a good bull bar. It can't be like what we have now. But when it was looking like a bull bar, I think when you have like that potential breakout like that, you know, buy above it, put a stop below it, risk 3 points to make 20 or 30 points. You're gonna lose it most of the time, but when you do win, you can catch a nice Nice swing up. So now we'll see if we can get a good bear close. You see the bulls have been failing to go up above this level here. So not going to get a good bear bar here, but it is going to be a doji, so it's not, it's not the follow through the bulls are wanting. Looking at the 2000 tick chart, there's lots of trade ideas that come from the 2000 tick chart. A lot of swing ideas. So when the market's moving and is trending, you can look at buying above bull bars that have pulled back to the moving average or the trend line. So this could be an example here. If I was going to buy above something like that, I'd be going for at least 2 times my risk. So I'd risk 4 points or so and try to make 8. Another idea, if you feel like the market's reversing, is looking here, we were going down, and if you feel like the market's reversing here and it might be going up, you could be buying at the moving average, put a stop 3 points below or so, and then try to go for 12 points or 15 points. So like I said, you'll probably get stopped out a lot, but then if you think there's a decent chance of that reversal, then that'd be a good area to be buying once it's broken above the moving average and it's pulling back to it. On the way down, selling below bear bars and swinging. I think the key is swinging. You want to be trying to find what the direction is going to be, and then take swings multiple times your risk. There's a lot of traders that just do the 2000 tick chart. So there's Mac with price action trading. I've watched a lot of his videos. There's Thomas Wade. Um, and Thomas basically learned his strategy from Mac. And you can watch their videos, and they're really taking the same trades. And what they do, they're looking for failed second entries, and then taking trades in the direction of the trend. So, and basically they're looking for signal bars at the moving average, not the trend line. A lot of these aren't quite clear. They might consider this. So first entry short, second entry short, and it's failing, and then might take a long above that. And it's much better in trending markets. So first entry long here, second entry long, in the channel. So buy above that and take a. They actually usually scalp out, but they also hold a runner. So sometimes they'll make these little scalps, but then that big runner that they get occasionally will really give them the big profits. I think this part would be an okay swing buy. So when we're close, attempting to break out like this, then you get a good looking bull bar, and you can take a swing above that. The key is you don't want to just go for like 2 points. You want to go for at least 2 times your risk. So if you had bought above this bar, stop here, take profit up here. You'd be getting close to it now, and I'd probably just go ahead and move my stop up to a couple ticks above the break even. So at least you can't have a losing trade on it. And I found that kind of management is more profitable than just letting your stop get hit or the limit order. So like here, it'd be better to have your stop moved up instead of just leaving it down here. So this rally we've had, the last week or two has been surprisingly strong. After all this selling, we wouldn't expect to have a rally of that strength. Just looking at the daily chart, 5,500 is definitely a target now. We've been this strong. We have a gap here. So it's probably going to get up to 5,500. If it doesn't today, it would probably happen this week at some point. So I'm glad I waited to sell below a bear bar because I didn't want to be scaling in like 5 points here and then scaling in more because then we would have had a much larger position than we would have wanted to. The cat's meowing. I'll be back in about 5 minutes.
Order canceled. Order submitted.
Alright, so I will add on below bear bar like that. So our midpoint, if we sell below there, our midpoint would be here. So not so sure it would actually get back to that price. Hey John, good morning. So we're demonstrating here how to scale into trades. You can see we had shorted down here, expecting more down, and well, the bulls have really had control since then. What we did do, we did take an Emini. We bought with the with a Emini here, got 5 points here, so that offset most of our losses that we have currently. My plan is, I'm just waiting to sell below a bear bar, so could be this bear bar here, and then we'll try to get out break even. So we'd have profit on our Emini trade here, and then maybe break even on this this failed short here. And I was explaining that this is the reason why I don't recommend like beginners to be trading with a plan on scaling in, because it requires too much management. It's stressful, and they can lose a lot of money. I do have confidence that this short, that the bears will be able to get out, break even from that short. So that's the reason I've been holding it. Like I did here, I was able to buy, and I knew that if it was going to continue up, we'd have chances to buy. So we bought, and we're able to get some profit on the way up. So I don't want to sell below
Order
a bull
canceled.
bar like that, so I'm going to remove my order. Targets above, we have this measure move up. So from the low of the day to the open, put this up here. You have this blue line, which is a prior high here. Then we also have 5,500 above. So those are all targets for the market to get up to. I think this is a good demonstration on why you really need to trade small if you're going to be scaling in. Right, like you need to trade so that your total risk is going to be no more than your normal risk would be. So you need to trade small enough so that once you scale in, then you're not going to be losing any more than you would on a normal trade. So, you know, for most people, that's going to mean doing one micro. Really, for most people, one micro even still isn't even small enough, which is why scaling in should not be used until they're more advanced. So this channel we drew in has been holding the whole way up here. when you have a channel like this and moving average, you know, you want to be looking for bull bars near the moving average, near the trend line, and be buying above them and swinging. So, you know, you are going to have some losses, but then your winners should offset your losses. So we're touching this prior high. This could be a point where the bears try to send the market back down. Try to get a bit of a wedge pattern. First push, second push, and third push. Channel we drew and still holding. So I'll need a better bear bar than that to be adding on below it. You know, the bulls are still way too strong to be selling below a weak bear bar. So this channel here, we drew this in, I think somewhere back here. It shows you how long these channels can last, and the benefits of trying to take swing trades from the bottom of the channel. If you ever think you're in a strong trend, then definitely flip over to 2000 tick or a smaller time frame and try to look for entries above the moving average, and go for multiple times your risk. So if this can have a good bear close here, I'll add on the short below that. And be looking at a wedge. Needs to be a good bear bar though. We don't want much of a tail below.
Order submitted. Order filled.
Really, the two reasons I've held on this long is, one, I've had a strong suspicion that the bears will be able to get out, break even from this. So if they hold on, they'll have a chance at some point today to get out. Two, I knew if it was going up, we'd have chances to get long, and we did here earlier on the Emini. So we were able to buy on the Emini and got 5 points on the Emini, so that offset a lot of our losses so far. Let's look at the Nasdaq. Nasdaq's already had 2 bear bars here. So a common measured move target. Let me get rid of some of this on the chart. Clean it up. Common measured move target. So from the low to a breakout point. So we would have that here. So we have the gap here. So this high and then this low did not overlap. So there's that we have that breakout point, and that's it's common to have a measured move target from there. So that would put us up here. It also coincides with the measured move target from the low to the open. That puts us at the same price. So come up to the bottom of the channel that we've had drawn in here. That's been a tight channel for a while now. So possible wedge here. First push, second push, third push. So we're expecting about 10 bars and 2 legs down here. So bulls might take a breather for 30 minutes or so and trade around here. I don't know if we'll be able to get out break even on the whole trade. You know, might just get out around the moving average. So what I did, I sold 2 micros here and sold 2 here. What some people do is they'll increase their size on the second trade. So they sell 2 here, they might sell 4 up here. You know, that would put our break even closer to here. So looking at this channel, this was such a tight channel. There's so much strength in here. I'm not expecting this first sell-off to just continue down. You know, I'm not expecting the bears to just immediately just take over and start pushing the market right down. So this has really been the first bear bar to sell below. This didn't trigger and this didn't trigger. So a lot of people are looking at this right now. This close, and then selling at this close, below that bar. That puts the median price right here. So a lot of people have this drawn in right now and are watching that this is where people are trying to scale in at. So with this wedge and getting a good signal bar like that, probably a lot of bulls got out below there, but they'll be looking to buy again above a bull bar. So if the bears fail to go lower, they'll be looking for buys again. It's kind of the idea of the wedge. Like the bulls give up for about 10 bars, and then after about 10 bars, they look to start buying again. So we have our first leg down here, and we'll should get a little bit more down for a second leg. So we've just had 3 bear bars, which is actually the first time today we've had 3 bear bars in a row. It's actually the first time since yesterday morning we had 3 bear bars in a row. So it's notable. First time in a while the bears were able to make money selling below bars. Anywhere through here selling anything, selling above anything, they've really not made money. But here, suddenly they were able to make money selling below bar. Now, like I said, I don't think this is going to just go rocket right down, but the next few bars might be more of a trading range atmosphere instead of just straight up. So we're coming to the moving average. There's probably some buyers in the moving average. We haven't been above the moving average for all that long. Almost 20 bars. Usually once it's beyond 20 bars, that's when you start looking where there's probably buyers in the moving average. Like the first time it touches it, it'll be bought. But we're just kind of right around that 20, so we haven't been above it all that long. So bears are working to get lower here. Now they're coming back to the open here. I would expect there to be buyers at the open. So look at what we're coming into here. Like I was saying, we have the lowest close down here, which we had sold, and then people were selling at this bar here. So it actually just touched our limit order there. But look at right where that tail came down to. It was just one tick above the that midpoint between the two trades. So, and you can see how quickly it got bought up after that. So I mean, I'm kind of glad I was able to show this as a demonstration of, I mean, how the market works. How it trades. You have this lowest close. People sold this. They held all the way through here and sold more higher, and then the evidence is right here. We have this tail that formed. It came right down to it, one tick above. So you probably had some people front running that midpoint there. And so the evidence that this is how it works is right there. So
Target filled.
okay, so able to get out with a couple ticks profit there. And then so we made five eminis. With one emini we made 5 points buying this, and then we were able to get out, basically break even on that. So overall, we profited from this venture here. So we have, all right, so this wedge worked out. We had the 3 pushes up here, got a bear bar. This little bulls got out below that bear bar, and then we also shorted below that bear bar as the first bear bar after this close. So, and looks like that's what everyone else did too. Now, but I really want to stress a point. Is this really, this is just more of a demonstration on how the market works. But is this really the trade that you want to be in? If you're selling here, then it's better to just go ahead and take a loss and just get out somewhere here, get out above this bull bar, or get out above the bar itself, and not to scale in. Unless someone is already an advanced trader that has the experience, they've seen how the market moves, they have the confidence to manage the trade, then this is a sure way to lose money, is trying to scale in against something like this. So when you're starting out, just look for what is the trend, and then try to find reasons to get in with the trend. All right, so that's a great point. The stress. So when if you're trading for a living, you don't want your job to be stressful. You want to be able to relax, have fun, and make money. You don't want to have to be like, this is probably the most stressful way to trade, is scaling in against against a move. So, you know, at times it might be a lot of fun, like buying and selling constantly and scaling in, but you know that 20% or 10% of the time when it goes against you, you're at risk of losing way more than you would think. And you really need to be have that experience if you want to try to scale in and take trades like that. So it's better to just say, oh, we're above the moving average, we have a double bottom here, I'll buy there and I'll take a swing. Above the moving average, bull bar, swing up. Looking at the 2000 tick chart, we're above the moving average, I'll buy above a bull bar, swing up, or I'll buy the moving average, stop a few points below and go for 10 or 20 points. That's going to be a much better way to trade. Thank you. And I think a lot of being able to stay calm, it just comes from one, just understanding what the market is doing, and then trading small enough. So if I had done like a full position here and I was trying to scale in, I mean, you just can't do that. You got to trade small so that you can remain calm and remain objective and make the right decisions. So look at the type of day we have now. We have really it's more of a trading range day now. The open is probably going to be important the rest of the day now. So anytime you start to see the open tested multiple times, it usually remains important. So we have the open. We kind of played around with the open here, broke out, and then we're pulling back. So, is the market going lower here? It probably has a little bit more down after these two big bars like that. But then I think the market would probably try to test the open again, and then you'll see a lot of times like after 3 o'clock. In that last hour, if the market's down here, it might make an attempt up, so you might get 4 or 5 strong bars up and it'll come back and test the open. Or if it was up here, you might get 4 or 5 strong bars down to test it at the end of the day. So how I do my measured move up, let me see if I can. So this is my my box here. What do they call it? My drawing object. I don't know if you use NinjaTrader, but I have this up. I'm trying to think of what the indicator is called. Anyways, I have this. I have all the little tools I use there. What I use is the Fibonacci retracement. And instead of having all the Fibonacci numbers, and I edited it so that it's just the 50%. So you can see I have three price levels. I have the 0, 50, and 100. So I removed like the the Fibonacci numbers, and I just have the 50. So I use that for 50% pullbacks, and then also for a measured move. when you get a channel like this, usually the breakout of the channel tests the high of the day again. So I think it was a bit of a surprise that it just went straight down like this. But usually when you have a channel, it looks something more like this. So you have a channel down, broke above the channel, and then it went back below the low before heading up. So usually it breaks out above, but then goes back below to test it one more time and then continues up. So this is what you see here is more typical breakout above then down. Unlike this is not as typical where it just breaks out and just goes straight down. All right, so I'm going to go ahead and end the stream. Couple ideas I see before heading off. I do see, right, this open is important. So it's probably going to stay important the rest of the day. 2000 tick chart might be having a second entry short here that might fail. There might be a long off of that. So first entry, second entry might be able to get a long off of that. If I see, I'll be back. I'm gonna end the stream, but I'll be back around 1 or 1:30. And if I see any other trades or thoughts, then I'll post it on the Discord. So if not already part of the Discord, should be a link in the bio to that. And then so even when I'm not streaming, I'll post trade updates there. You can ask me any questions you'd like on the Discord. We can have like more of a one-on-one conversation if you wanted. I'd be happy to answer any questions. So if you want to reach me, that's the better place to do it.